Marnie Baker, nice to talk to you. Now, profits were down, but cash earnings beat consensus. I guess the focus for investors is on the dividend cut. Is that a reset?
Yes, it is. It is a reset, and it's something that the board really opined over, and it was a difficult decision for the board to make. But given the capital raising and given the market, it was a decision that the board arrived at to ensure the sustainability of the dividend.
Indeed. Now, that board also presumably looked over the very high dividends or reasonably high dividends that you'd had in the past, and would have also had an eye on the APRA CET, the capital requirements. Is it fair to say that perhaps they should have seen this coming?
In relation to the capital, I mean, we're doing a capital raising for a few different reasons. We've had a strong growth in our residential mortgage portfolio. We see that and expect that to go into the next period. The momentum is really there around lending. So to support that residential lending growth, to ensure that we can invest in the technology and regulatory change initiatives that will ensure that we actually remain and continue to meet our customers' needs. And then, of course, the third, as you raised, Ticky, was around ensuring that we were able to, well, it increased our the buffer above the unquestionably strong CET1 APRA requirements.
Right, but I guess what I'm saying is that you've got, yes, impressive above systems growth in lending now, but were investors really the recipients of more dividends than they should have been in the past, and you're now having to regroup as a result?
Well, the board can only make a decision based on the information at that point in time. We've seen a quite strong growth over the last half, considerably stronger than the half before that. And looking out to the future, they took that into consideration with needing to make the adjustment to the dividend that we announced today.
Your margins, your net interest margins were, I guess, a bit of surprise on the upside. What drove that?
Look, tight margin management, looking at both sides of that, our deposits and our lending, remembering that we had a couple of cash rate reductions come through during the half, and the flow-on effect to that was that we're able to maintain margin for a little longer in the half. I think going forward we do need to be mindful, and especially if we aren't seeing any more cash rate reductions, that we can't expect that margin to hold up like it did in this half in the next half.
Right, still quite a good half there. You've got costs though, particularly around your software. Again, is that, are we seeing really most of that expressing itself now? Because it seems quite, again, a catch-up exercise on the software front.
Yes, well, we did write down $87 million in software assets. The vast bulk of that related to our advanced accreditation project, so 57 mil of the 87 related to that. And we have seen a significant change and deterioration in the benefits that we expected to receive from becoming advanced accredited since we first embarked on that journey. So in this uncertain times, and given the changes that are occurring to the capital standards, we made a prudent decision to actually write that back.
Marnie, going forward, how do you see the economy? Because you've been quite strong that the Reserve Banks, the cuts in the rates haven't necessarily done much for business confidence. If anything, they've actually lowered business confidence. You still stand by that?
Yeah, well, I think I have to say, and I think the Reserve Bank Governor would be pleased with what he's starting to see come through now as a result of the monetary policy adjustments that were made, over the last 10 months. So, yes, I was a little critical, I suppose, that enough hadn't been done from a fiscal perspective, and relying purely on a monetary policy was not the way to go. But I think we are starting to see those benefits start to flow through now. They've just flowed through a little later than what was first anticipated.
Yeah. On your small business lending front, that too I think is up over 15%. Regulatory and compliance now, how are you dealing with those issues of unfair contracts with some of your borrowers?
Yeah, look, we had an issue with ASIC in relation to unfair contracts. Now, it's very important to know that we have been working with ASIC in relation to that. We recognise that there was a clause in our contracts that was unfair. In no way has ASIC ever said that we have relied on that clause, and no customer has been disadvantaged in relation to that clause. We've made the adjustments now to those contracts, and we're just settling that through ASIC at the moment. But we've been working with ASIC through that.
And you see lending to small business continuing to grow, do you, Marnie?
Yes, yeah, absolutely. And it's really, I'm quite bullish around business. The confidence has been off a little bit, a bit below average, but you know, I think getting some more investment back into, especially in the small to medium businesses, is going to start to help to stimulate the economy even further.
Finally, I'm really interested in your digital partnerships. You've got one with Up, one of the first neobank, I think it was, and also TikTok. And do you see that as being quite a disruptor, TikTok, in that it's not really into the first home buyers market, it's more really refinancing loans, isn't it?
Yes, it is, and we've got an investment in TikTok, and we've been partnering with TikTok for a couple of years now. They've really hit their straps. We're now starting to see, I think in the last period was a 55% growth in loan approvals. They've hit $1 billion worth of loan approvals, and the momentum is really starting to kick in. It is an online process, so anyone who has an existing loan or wants to take out a new loan can actually do that all online, and it's a very, very quick process. And because of the automation behind it, it also assists from a responsible lending perspective to ensure that all of the right checks and balances and questions are being asked.
Marnie Baker, good to talk to you. Thank you very much.
Thanks so much, Tiggy.